Good evening and welcome to Capital Connection, where we join the dots to give you the big picture for business in Africa. I am Fifi Peters. South Africa's parliament today began grilling Steinhoff international executives.
We feel that you're not fully appreciating the gravity of what's at issue here. So we're pleading with you, answer questions precisely. Where you can't, let the lawyers say why they can't. Let Advocate Jenkins say what he wants to say and let the members decide what we do. Precise answers, please.
The Stellenbosch-based group's share price plunged 95% last year after accounting irregularities were flagged. It's a story that we will watch closely in the coming weeks. But back to the lineup. Whatever anyone might say, British Prime Minister Theresa May's whistle-stop tour through Africa is about one thing and one thing only: negotiating new trade deals after Britain voted to set itself adrift from the European Union. Our panel will interrogate if Africa can take advantage of Brexit and strike deals with the desperate former colonial power that favour the continent at Britain's expense. Now that will be a nice change, wouldn't it? In Youth Africa today, we meet an entrepreneur who has combined the new with the old to make a success of his printing business. And in a report from Rwanda, we take a look at the country's obsession with radio stations. But first, the satellite service provider MultiChoice revealed that Black-owned Newsroom Africa will become its latest 24-hour news channel on its bouquet. Melita Ngalonkulu filed this story on an increasingly crowded pay for TV market here in Africa.
I'm pleased to announce, ladies and gentlemen, that the successful bidder is Newsroom Africa.
The moment in Johannesburg when a new news channel was born. Newsroom Africa beat off 110 competitors to land the multi-million rand tender to run a 24-hour news channel on MultiChoice. These are the fresh faces of the new channel. Thokozani Nkosi, former gospel singer and owner of a production company.
We have premised our offering on the understanding that the way that news media is consumed is continually changing. And our offering will not only follow, but will also set trends in the space. And we believe that it will increase the news-watching audience that we have in South Africa right now. In terms of our editorial policy, we are entirely independent, like I said, and we believe in fair, balanced, unbiased and unafraid reporting, and we've put together a very strong editorial team to see to it that we stick to that mandate.
And a former newsreader, Tabile Ngwatu.
It's no secret that the future of media is digital, and that's why we took a deliberate decision to put digital at the heart of our news channel. We are essentially disruptors rather than being disrupted.
But the question many people are asking, where is the big money coming from? Kate Skinner, an independent media analyst.
Transparent in terms of their financing. Look, I think that is one of the issues, is that we don't always know what the financing arrangements are. And I think that we should start actually ask questions, because it is going to be incredibly important. How is this new channel funded? Is MultiChoice going to give us a whole lot of, give them a whole lot of money towards it, which they did previously for ANN7? Those kinds of details I think are important to know. MultiChoice is going to say no. So how transparent is the industry? I mean, my understanding is that, my view on that is that it probably isn't transparent enough. It is very useful to know, how stations are funded. The thing is that MultiChoice is not going to really want to tell us that. They're going to say, we're a commercial operation. This is a commercial operation. It isn't you shouldn't actually know. But given the fact that they are so powerful, MultiChoice, and own literally 98.2% of the subscription market, then you start to say that they're beginning to play a public role, and therefore we do need a lot more information on that.
The other question people are asking, is the industry big enough to support the new kids on the block?
The thing that I think is very important is local content. So you've got YouTube, you've got Netflix, you've got all of those kind of things, but, they're not as good, they don't have local content. So the issue is that ENCA has done incredibly well as a South African news channel. So the hope would be that, they're coming in later to the market, and you're right, it is more fragmented. But if they do put together a very good news offering and a quality programming offering, they certainly have a chance.
With so many questions being asked, the newest news channel in Africa could become the story.
Thanks, Melita. Radio has a checkered and bloody history in Rwanda. Before and during the 1994 100-day genocide, Radio Mill Collins was the most prominent of the hate media stations. It used the airwaves to encourage the slaughter of more than 800,000 people. Thankfully, these days, the hate and vitriol have gone, but the radio stations have mushroomed. Fiona Mutoni filed this report from Kigali.
It is 102.3 Kiss FM, Kigali's #1 hit music station. Good morning!
Broadcasting live from the capital, Kigali. Spreading to 1,000 hills of Rwanda. We are City Radio.
The airwaves are alive in Kigali, one of the continent's biggest concentration of radio stations in one of the smallest markets in Africa. This is City Radio in Kigali, and its struggles are a sign of the hard times. For survival, it had to merge with a competing radio station, Hot FM.
As more players were coming into the market, advertising budgets were being cut, mostly with government, because considering the size of the private sector here in Rwanda, which is growing steadily, but it's not enough to sustain media houses. Our biggest client is government, who will command around 60 to 70% of the market share. So when there's a cut in media spend on the part of government, it really hurts on our side. Merging the two radio stations, City Radio with Hot FM, we're seeing it as a strength. It will create an opportunity for us and get us out of the slump.
10 years ago, we only had 19 radio stations here in Rwanda, but today we have over 40 radio stations. What that means is that we have a very intense competition in a very small market. At the top of the survival heap is Kiss FM, a private radio station started at the end of 2014. It swiftly became a household name in Kigali.
Every radio, they have a way they are relevant to our target audience. But in terms of commercial competition, I think it's been critical, and there's been a lot of conversation if the media houses make commercial sense in Rwanda. Social responsibility, yes, there's been some achievement. But in terms of making money, it remains a big hurdle for every radio station in this country, inclusive the national broadcast. I think Kiss FM being a market leader, both in terms of numbers listening to the station and in terms of revenues, is centered on the business model that they had.
There will be no more issuing of radio licenses anytime soon. In the saturated Rwandan market, for those hanging on, survival is the prize.
Time for our Youth Africa segment now. German-born and living in South Africa, 27-year-old Alexander Knieps spoke with our Capital Connection correspondent Nzirabatinya about privilege and the tricks entrepreneurs use to raise capital.
So you decided to go into the printing business, Alex. Tell us what makes your business so unique from the other existing printing businesses.
Thank you for the question, and thank you for inviting me. You're absolutely right. I mean, there are, I think, just in Gauteng, there are more than 2,000 printers. So it's a very good question why we entered the market about 2 years ago. Generally, we saw a gap in the market, and that's mainly that, you know, when you compare the input prices that you have in the market, so your material costs, and to what the market charges, you see that there's a huge inefficiency, despite a lot of printers being in the market. And there we saw an opportunity by offering an online solution, streamlining the whole business, streamlining the whole process, standardizing the whole process, and basically being able to offer a lot more affordable prices.
But you declined an offer for $1 million investment in your company. Can you tell us why did you do that, and how did you manage to self-fund your own business?
So generally, investor talks normally go for a very, very long time, and there are a lot of legal clauses involved, and I think as an entrepreneur, it's just very important that you know what you're signing. For me, it was in the end a decision. I knew the people that I was dealing with. I knew how they operated. However, there were certain clauses I was just not comfortable with. And in the end, it then boils down to just saying, these are my boundaries, and I'm not going further. And I think it's a process. You learn about these different clauses, you educate yourself about it, you read books about it, and then you come to a conclusion. It's just not worth it to give up equity with these clauses in it. And how did I deal with it? Well, it's a lot of self-discipline then in the end to say, okay, it doesn't matter if I get the money or not. I have that vision, and I have to now sacrifice a lot of other things, lifestyle, food to a certain extent, and I just have to push through it. And it's always better in the end, in any case, to fund your business with your customers and maybe with suppliers. And exactly that's what we did. We tried to scale very quickly to get money from our clients. And on the other hand, we did some strategic partnerships that also helped us, fund the business.
Entrepreneurship can be quite a lonely journey. I'm sure you can attest to that. So how would you motivate young people who also want to do what you're doing right now? It's always a double-edged sword on the one hand. On the one hand, I would encourage everybody to do it, to test it out. On the other hand, it's also not for everyone. And I think it all boils down in the end to self-awareness. Is entrepreneurship something for me? Do I like to be challenged every day? Do I like the feeling of feeling uncomfortable? Do I like uncertainty? Do I like to push myself every day to the limits? And then also, is that the right moment to do it? Have I gained enough skills? Have I gained enough knowledge about the industry that I'm going to go into? In the end, there's never a right moment, I would say. If you have 80% of these questions or even 70% of these questions answered with yes, you just need to go for it, because there will never be a perfect moment. So I encourage everybody, think about it, think about if you're ready for it, and if you can just say with a 70% likelihood that you're going to do it, that you want to do it, then just go for it.
Thank you, Anazi. Coming up after the break, we talk economic suicide, cutting off your nose to spite your face, and why British Prime Minister Theresa May is always saying that Brexit is not the end of the world. Welcome back to Capital Connection. In 7 months' time, Britain will walk away from the European Union and turn its back on the world's largest single market. It is no coincidence that Prime Minister Theresa May is touring Africa. She is desperate for trade deals, and everyone knows it. Joining us to discuss if Africa can take advantage of Britain's wandering in the economic wilderness, we are joined by international relations specialist Emery Nzirabatinya in Kigali, international security studies consultant Peter Fabricius in Cape Town, and in studio by Azwimpheleli Langalanga, a trade and investment policy advisor with the Tutwa Consulting Group. Gentlemen, thanks so much for your time. Peter, perhaps if I begin with you, what do you make of May's visit here in South Africa? She's been saying a lot of things. She's looking to broker stronger trade deals. Your view on the Prime Minister's visit?
Yeah, look, I mean, I think it's a good thing. You know, there's some cynical views being expressed by, particularly in the British media, about how this is all just desperation because she's made a mess of Brexit, and they're desperate for new trade partners because they're going to be out of the EU. Fine, but I mean, we don't really have to care too much about that. What we do have to care about is that we secure and advance our trade interests with Britain. And Britain is a major trading partner, fourth largest, whatever it is, for South Africa. Certainly one of the biggest within the EU. So one of the things that she did when she was here was to sign this agreement that puts us on a surer trajectory towards a trade deal with the UK when they do pull out of the EU. And it'll basically be based on the existing so-called economic partnership agreement with the EU, plus some adaptations for the actual historical trade that we've had with Britain. So I think it's a good thing.
It's a good thing from your point. And Emery, the Prime Minister is not exactly coming to Rwanda, but she is planning to make a stop in Kenya. I'm interested in the future trade relations or the prospects of future trade relations you are seeing with the UK as an East African bloc, and how you perhaps think that we can take advantage of the fact that the UK does have a weaker negotiating hand right now.
My position, actually, I would first of all say that it's not bad, and actually when you're taking any projection towards a trade deal, it's not bad. But let's put facts on the ground. Let's look at why, first of all, the Prime Minister has decided to go to South Africa, Nigeria, and Kenya. These are the three biggest economies in Africa, so to speak. And when you look at it that way, any trade deals that has to take place might probably take place after March 2019, when now the Prime Minister has to trigger Article 50, that is initially to exit the European Union, which is Brexit. But again, with regard to your question, so much has yet to be desired, because South Africa is one of the biggest trading partners of Britain, or maybe UK, if you want to call it. Nigeria is the second biggest economy in Africa, so like Kenya, which is the third. So technically, she's very strategic with the countries she's visiting, and we are seeing that what comes to place would initially mean that there is so much to lose, especially when the UK leaves the European Union. But again, also there's also something else to lose for Africa, because you'll see that once the process is done, and after March 2019, South Africa GDP could actually slope down to -1%. Kenya could get a little bit of a slump in its flour market deals in Europe. Nigeria oil prices could be going down. So there's so much at stake, and she's coming to Africa to try and strike those deals. But suffice to say that it's also important to know that when she's coming down here in Africa, I don't see so much. It's more or less like, you can call it just giving a small plaster to a wound, because UK has been trading with the EU on an annual of about 240 billion pounds. When you look at the percentage of the UK vis-a-vis Nigeria, South Africa, and Kenya, we are talking about something like 13.1 billion pounds. Right. It's just an iota in the sea.
Right. But she hasn't come empty-handed. She has come with £4 billion of investments that she once was committed to pouring into the African continent. And my question to you, Azwimpheleli, how do you think African economies, particularly the three that she's got her eyes on, should take advantage of brokering new trade deals with the UK?
I think maybe a country like South Africa, the good thing about Brexit is that then it leaves what is called the European Common Agricultural Policy, which was sort of a bit of maybe a protectionist policy against our agricultural products. So when Britain eventually leaves, we assume that it will not continue to offer subsidies to its farmers, and then our products will be more welcome in the UK. And I think already it was more open, the trade was open because of this SADC EPA, which she says they will take it and become the UK EPA agreement. But what could happen is that what we could take advantage of, maybe South Africa, is we could add some other issues in the EPA that we were not able to do under the EPA as it stands now. This includes issues like competition policy, issues like government procurement, your investment policy. So we could maybe, for instance, have a chapter on investment between the UK and South Africa as a test ground, because I think in the long term we'll need to have something to replace the bilateral investment treaties that were terminated a couple of years back.
Sure. I mean, right now, Peter, the UK doesn't even know what Brexit is going to look like. It's in and out of discussions there with EU members about how to broker the best deal. Is this visit then not a bit too premature, given that it doesn't even know what position it will be in 7 months' time?
I don't think so. I mean, I think what is very important is and I certainly agree that we do need to look to improving our trade relationship with Britain. And for example, as the previous speaker pointed out, the fact is that the UK is not as protective about agriculture as some of the other countries in the EU. So there's an opportunity to increase our food exports to the UK. But what is important is to have a provisional deal in place so that if and when the Brexit occurs, we don't suffer some hiatus in our trade relations. And that's partially what May was doing here. She was giving some impetus to the efforts that have been underway anyway in negotiation to ensure that there's a sort of temporary deal in place when they do pull out. And then with that deal in place, which will basically be a replica of the EPA with some adaptation, then they can negotiate these other matters. So I don't think the uncertainty about what's going to happen regarding Brexit obviously has implications, but I don't think by any means it's premature for Britain and South Africa and other African countries to nail down a provisional agreement.
I mean, because some of the headlines that we're reading here on the continent is that if the Britons had their way to vote again, they indeed would actually vote to stay in the EU bloc. But we'll see how that develops. Emery, bringing you back in, you mentioned some very worrying possibilities that could occur to African countries as a result of Brexit, particularly these countries that May is visiting in the way of a sort of less economic growth. I want to know, is this a short-term view or a short-term result and nothing that will continue in the long term? And also, I mean, from a Rwanda standpoint, how does Rwanda foster better trade deals with Britain going forward?
It's important to point out that actually, if you were to single out Rwanda, just as so you ask, we enjoy a cordial and warm bilateral relations with the UK, and we've got a good platform as far as trade is concerned. But again, it would also be good to look at it from a standpoint whereby you're looking as Africa as a whole, as a bloc. And at the moment, my opinion would be, I don't think there's a panic button yet for Africa, because actually, when you go back to 2016, and when Britain was just saying that we are going to be out of the European Union, immediately the 3 East African countries minus 3 others, here I want to say the big ones, which is Kenya, Uganda, and Tanzania, actually stopped their trade negotiations with the EU. So instantly it was to try and see which way forward. But again, the best way to look at this would be from an African standpoint. How much are we losing, or how much do we stand to gain? And it's good to look at it from a positive standpoint and to probably mention that it is imperative to state that Africa has been using, let's say, for example, extractive infrastructure. Let's say, for example, you take a quick one. A road from, say, a place like Kasese, Uganda, going towards the sea. And pretty much that is just taking probably copper out of Africa. But again, what Africa needs to do is to relook into the intrinsic and actually what we call interactive infrastructure. Like, say, for example, the road from Cape Town to Cairo. Like, say, for example, the railroad which will be coming from Dar es Salaam to Rwanda. So those are some of the things that actually need to come up, because I don't think hope is lost just because there's Brexit for Africa. No. I think Africa just needs to be careful a little bit, and I'm glad that now it is partnering with the United Nations Conference on Trade and Development. The Secretary General, Dr. Mukisa Kitui, who has been actually being at the forefront of trying to take it to the next level, where they try to make sure that African negotiators are being trained on what is critical. So trading with Britain, or rather trading with UK, is important, but again, this time round, it should be on an equal basis, not from a philanthropic point of view, but actually from a situation whereby it's a win-win situation.
And what is encouraging is that May is quite understanding of the part that South Africa is trying to address by way of land policy. She says they support a policy that is transparent, or a process that is transparent nonetheless, and that drives inclusion. So this should already broker a better sort of negotiating plate that South Africa is able to take from these new trade deals with the UK.
Yes, yes. I mean, so the Conservatives by nature have always been sort of understanding of these issues. If you follow the history of the land reform in Zimbabwe, they find that the people that the Mugabe regime in 1979 had agreed with was the Thatcher government. This was a Conservative government. And they tend to take a more understanding view of issues like land. And in addition to that, I think also they learned a lot in Zim. The UK was very much involved in the land reform in Zimbabwe, and I think there were lessons to be learned. I think one of the lessons is that you have to be engaged, and because if you take an antagonistic view, you might, at the end of the day, not really benefit anything. And also there is the issue of what also they learned, I think, in Zimbabwe was that because of the position that they had taken, it sort of created what we are called dark nights, and in the form of the Chinese that then came off and filled that vacuum.
Sure.
And another thing that is important, I think, by your visit in Africa is that for Africans, it helps to increase more options for Africans, because now you have the US, the EU, the UK, and the Chinese. And as Africans, we need then to be able to leverage these relationships and to get the best of our own interests.
Sure. Yeah. Well, it's still 7 months of negotiating for the UK, but as we have seen quite positive conversations coming from May's visit here so far. In fact, by 2020, she has said that she wants the UK to be the G7's #1 investor in Africa. Time will tell. But that is all we have time for this evening. Thank you once again to my guests, and you can join us again on Monday at 6:30 p.m. Central African Time, where we will focus on Africa's youth unemployment crisis. Good night.